Well, that news of HPAI and the dairy cattle was just one of the many factors impacting the livestock markets over the past week. To understand the full picture when it comes to the cattle complex as well as the grain markets, we were joined on Wednesday afternoon by livestock analyst Kyle Bumsted. Let's talk about the livestock market because it's been a pretty quiet week, I say very sarcastically. A lot of moving pieces to the complex right now for cattle.
That's right. There are, Bryce. And we had this cattle on feed report last week. Of course, the placements came in higher than trade anticipated, but cattle on feed reports, it's old data anyway. It's 3 weeks old when it comes out. It came out last Friday, and when Monday morning they hit the gas on the way down, we gapped lower, and we didn't look back. And we made new 4-week lows yesterday in this live cattle contract. Made new 4-week lows here in the feeder cattle contracts as well, which is kind of saying to me that this rally could be over. Now, last week's cash was trading a lot of 192 to 193, and typically the third week of March, you put in a cash high here as far as the spring high as far as cash cattle go. And I always use Easter as a guide. Typically have your cash fat sold by Easter, and that's kind of the way it kind of falls in there. And that's what it's showing us here again. Now, Tuesday's action here, we saw some big volume and big open interest changes. Open interest washed out almost 8,500 contracts in the live cattle and over 600 contracts in the feeder. Live cattle traded over 136,000 contracts, and feeder cattle traded over 26,000 contracts. So that tells me that these non-commercial funds, they said, we want to take some money before the end of the month, and we want to just bank some profit here. So that looks to me like it could get a little bit dangerous if we start to violate some more downside technical levels here, as far as like taking out the 100-day moving average here as far as June live cattle. And if this thing does start to weaken on the cash side of things here a little bit more, then we could start to see that the hedgers here really come into play here, the basis traders. If that board's going to keep falling down and cash is going to come down slowly, then yeah, the basis traders are really going to be at this market.
Okay, Kyle, obviously lots to dive in there of what you're saying, but also want to bring up something that was confirmed on Monday by USDA, highly pathogenic avian influenza. Of course, we've talked a lot about that over the past couple of years when it comes to poultry, but a dairy in Texas, we've got a couple other confirmed cases now across the United States, dairy cattle impacted by HPAI. Is that weighing on the cattle sector as well?
I think it's more of a psychological thing. They keep saying that none of that beef is going to make it into the food chain per se if it's contaminated. So I don't know. There might be some herd liquidation due to it. I don't know what there's going to be. I think that there's been I know that Class 3 milk has had a big run here early this week. It shot up, but I'm concerned about consumer sentiment on that as well, as if it's not supposed to be able to get into the food chain. That's what they all say, but the consumer psychology could hurt the market a little bit more. So that's what I'm really worried about here, Bryce.
Going back to your big picture thoughts here on the cattle complex, sounds like you are saying that these high prices, this run we've been on since December, so I guess January timeframe, might be coming to an end, at least for now. Am I summarizing your thoughts are okay there, Kyle?
Yeah, that does kind of summarize the thoughts here. I do feel that this cattle complex got way overpriced here, and it is due for a pullback. We've pulled back $10 since last week's high so far at the middle of the week here. And we could definitely see some more downside to go here, especially here at the end of the quarter. We're seeing, like I said earlier, the funds are taking some money off the table here at the end of the quarter, banking some profits. And we still have plenty of cattle around here in front of us, and the weight issue that we have in front of us as well, too. We are still putting weight on these cattle out here. Yes, there is a storm that just went through, but in general, we are still putting a lot of weight on these cattle here. I think weights are about 2% over last year. Even though our numbers are supposed to be down as far as head count, we could still be putting some tonnage on this market. And we need to watch consumer demand here. What happens after Easter? Do we start to get into grilling season? Watch that and see how the demand takes us there.
Okay, let me ask the flip side of that. Those are the reasons why the market could be going lower from this point forward. What are some of the reasons why it could maintain where it's at or perhaps even climb higher?
That's a good question. Short term, we are oversold here on the daily chart, so we are getting into some oversold levels here real quick. We dropped down there really fast here the last couple 3 sessions, so we could start to try to find some bottom pickers down in here. I'd be very cautious of that. Now, volatility is at 3-month highs here in both feeders and live cattle, and that says to me that the option sellers out there, they're wanting to get paid for taking on that risk. So I'd be watching what the volatility does. If the volatility starts to leak out and go down, then this market's probably has probably run its course here to the downside short term until we get some sort of headline again, whether that's a plant fire like we saw last week in Kansas, or if it's another headline dealing with HPAI or something like that. Those are black swan events that we can't control, but you have the power to do something.
All right. Real quick, I want to get your thoughts on the grain complex. You and I recording before the planting intention is going to come out. Kind of a guess from the U.S. Department of Agriculture what producers are going to do over the next year. Where do you see the corn and soybean markets in particular, though, Kyle, here late March 2024?
It's a very good question. A lot of folks are saying that there's not going to be much change. A lot of saying a lot more corn acres, a lot less bean acres. But I'm going to say there's going to be more bean acres than there will be corn, because that ratio of beans to corn is traded at 2.5 to 2.6 all winter long, which favors more soybeans. When you get to really putting the pencil to it, there's areas in the corn belt here on the fringe areas as well too that people lose less money planting beans than they do planting corn. So I think there's going to be a few less corn acres. However, talking to guys here in the central U.S. here in the plains and in the corn belt, with the weather that we've had earlier before this storm moved through, there was a lot of anhydrous got put on, a little more anhydrous got put on than anticipated. And in some of those areas where the insurance dictates it, they can still grow corn. They can still grow a lot of corn. So I'm still watching the drought monitor as well. It's very, very early to be calling a drought. We do have some issues out there. We haven't gotten this thing completely taken care of. Eastern Nebraska is still very dry, and there's parts of far eastern Iowa that are still very dry. So we do need to keep our eyes on that as far as weather. And I think once we get through this Easter holiday weekend, we get this report behind us here, we're going to start to focus on weather a little bit more. Those federal crop insurance planting dates are going to be right around the corner for a lot of folks. Now, of course, nobody starts before the federal crop date, but definitely watching that weather there for sure as we get into the early starts of planting season.